All right, everybody, welcome back to another episode of the Discovering Multifamily podcast. I'm your host, Anthony Scandariato with Red Knight Properties, and this is another episode of Discovering Multifamily. And we have a special guest here with us, Michael Brown, and Michael has a pretty interesting story and a pretty interesting company. He's the founder and CEO at Red Fox Wealth, which is a boutique investment advisory firm. And he's also the author of The Real Perspective, which is a #1 Amazon bestseller. And it talks a lot about the secret investments that your typical financial advisor won't tell you about. And one of those areas is commercial real estate, of course. So we're going to talk a lot about that. And Mike found an interesting niche in this marketplace that had a void and a hole and an area for disruption, which I think everybody will find interesting. So, Mike, hope that did some sort of justice, but I'll let you take the floor from here.
Thanks, Anthony. I appreciate being on your show.
Sure.
I've been in the commercial real estate investment space, finance space for about 15 years. We created Red Fox Capital, which is a commercial real estate investment and development company. We work in all different asset classes other than multifamily. We'll leave that to you, Anthony. In that time period, building, capital raises for individual investments and development projects, we just started to tap out with our friends and family, which most guys do in their growth spurts. And took the natural path to go talk to other financial investment advisors, registered investment advisors, and to introduce our investments to their clients. And it was a great, response, but they never seemed to perform. And it didn't take long for us to figure out there was a natural conflict of interest, where if they sent any of their clients to invest in any of our products, they would lose out on their fees and their commissions. Right. And I thought that was really a horrible situation to be in. Not letting their clients really look at other investments that would really increase their bottom line and reduce their risk profiles. So I did the unthinkable and did deal with my partner to go into the Merrill Lynch program, become a financial advisor. So spent a few years working with the big wirehouses, and quickly found out that at Merrill, we weren't allowed to speak of any outside investments. We weren't allowed to speak of commercial real estate properties or anything along those lines. So we came back and said, let's disrupt this industry. Let's create a wealth management company under the same umbrella. Let's reduce all the walls of conflict and provide the clients the ultimate investment portfolio. Not only bringing in the traditional Wall Street products, but also allowing private commercial real estate investments into the portfolio. And it's been great. We've been able to drive returns 3 to 5 times higher and reduce risk and tax benefits and all the things that all your listeners know about that real estate can do for you.
That's great. So how do you are you technically an independent advisory shop now? Do you have to, like you mentioned, one of your partners is a certified financial advisor now. So how did is there a separate certification for that?
Yeah, so I had to get Series 7, Series 66.
Series 7. Okay, yeah.
Absolutely. So we have all of our securities licenses and are now currently a registered investment advisor that's independent of any of the big wirehouses.
Got it. So it's independent. So you now have the ability to offer not only the traditional stock market investments or life insurance investments, but
yes,
real estate too. Okay, that's excellent. So when you're basically offering the commercial real estate to your clients, mm-hmm. Do you find it more often that they definitely want to diversify into this asset class more so than the stocks and bonds? Have you found it a little bit more heavily concentrated now, given the light of, coronavirus and how that's impacted?
We do. Actually, I had a client last week ask me why he should have anything invested in Wall Street products when he sees the returns that the two of us can provide in private commercial space. It's it's kind of a no-brainer. Depending on the person, everything's a suitability analysis on the particular client, what they're looking for, what their goals are. It's a step back, and being 100% vested in real estate is most likely not a good idea for everybody. So we'll take a step back. We'll do an analysis and show their asset allocation. Typically, a traditional financial advisor would say, Anthony, you're really well diversified. But what they don't get is you're really well diversified in Wall Street, and that's it. So we kind of step back and say, no, you need to be a true asset allocation. So we will look at it. We'll divide it up into 3 buckets: your Wall Street, your alternatives, and then your cash guaranteed assets, and figure out what the balancing is. And, that depends on the client. So we'll rebalance them. And then once we have all that in place and find out what the goals are for the client, then and only then will we start putting particular investment opportunities in front of them that fit those goals.
Got it. So if you guys are acting on the advisory side now, because it's very easy to invest in the public market, right? Anybody can do it.
Right.
When you're talking about commercial real estate, it could be public for sure when you have the REITs, et cetera. So when you're talking about these private deals, how are you, I guess you've been in the industry for a long time, so how are you finding and vetting those deals? Are you, do you have a network of operators that you like to work with? Like how does that side work?
Well, primarily we are an operator, so under Red Fox Capital. So
That's right.
we do our own deals, but there's some deals that we can't feed enough deals. So if anyone has multifamily interest, we would reach out to other operators in that asset class. But other that we do industrial, retail, office is a little bit ugly right now, and land spec development. So anything that we can do in-house, we will at least provide that to our clients first, as an advantage of being our client, number one. And then we work with operators across the country, looking at the trends, looking at what the opportunities may be. We have a current deal in Idaho, so we will reach, across the country if we see a fit.
Awesome. And so how long have you guys been, directing your clients to the commercial real estate side?
Well, I've been in the commercial real estate, our investment company, for 15 years.
Right.
So we've been now pulling back the reins and integrating the Wall Street side for the past couple of years. And it's been a wonderful experience. And I think people are really understanding it. And in the book, The Real Perspective, I go into that. I mean, we talk about the history of Wall Street and show actual examples of taking a Wall Street portfolio, integrating commercial real estate into their portfolio. And you can just look at the numbers, how it can dramatically boost your portfolio.
Sure. Okay, let's talk about the book a little bit more.
Yeah.
There's, we don't have to go chapter by chapter, but we know the general theme of it. Could you give maybe an example of that? Maybe just the average individual that's been, maybe they work for a bank or, whatever the case may be, and they have a 401k plan, they match it every year, et cetera. But, and it's going into mutual funds, or
Right.
it's just going into the S&P 500 or the Dow. Do you have any examples that kind of maybe over, because that's more long-term, over, 10, 15, 20, 30 years, that if you combine the commercial real estate with it, it still outperforms whatever they were investing in, even if, there's
Right.
The matches involved and other incentives?
I'd say the one trend we've seen, the higher one's net worth, the more vested they go into private real estate. So typically we'll see a client with, say, a $3 million net worth and below to accredited status. Typically they're 25% vested in private real estate deals. As that goes up, we see, it moves to 50% vested in real estate deals. And then we have some clients that they truly are 100% in real estate, and don't want to touch Wall Street. So like I said, once again, it's suitability. It's like what particular specific goals does that client have? But I'd say on the low end, you're looking at 25% are vested in commercial real estate deals.
And on the high end is 50
Yeah,
for you?
yeah.
Okay.
And they are outliers that are 100%, 90, 100%.
Yeah, that's like me.
Yeah, yeah.
No, that's great. Um, so okay, so you come out with your own offerings, and then you have. So what are you seeing now? We're recording this in November. Where you know are your clients concerned on where the market's going to go? Um, you know, and that's why they're diversifying into commercial real estate more so than ever. Um, or are they just bullish about everything? Where are you kind of guiding the conversations? And you talked about, you know, the asset classes that you guys specialize in outside of multifamily. What asset classes number one in your mind so far?
Yeah. Well, I think a lot of the clients, I mean, obviously, I think most of our sophisticated clients understand taxes are going to go up and the debt of the country is going up. So they're looking to divest. They know that's going to be impacted on Wall Street sooner or later. Depending on, what happens with the election. There are a lot of things that could change over the next few weeks. So, you know, typically they're not running, scared to death that they're going to lose everything. Most of our clients could afford to lose a dramatic hit in the S&P 500. But we're pushing now into, we're seeing a lot of opportunities in retail. We're repositioning some smaller regional shopping centers where we can provide a preferred return of 8-9%, then have a larger windfall return into the high teens, up to maybe 18-19% overall project internal rate of return. And we're just seeing those opportunities where what I like to call Amazon-proof retail. So things that Amazon can't control, your center with your nail salons and your dry cleaners, things that you have to go to. We have a fund that we just released this month for a portfolio of Dollar General stores, which are doing extremely well. They perform exceptional through the COVID crisis and are little cash cows. So that's a pretty successful move right now. Industrial is one of our favorite asset classes, but industrial has become so overpriced. We just can't seem to get the returns that we need. But we heavily watch that because we'll jump back into industrial as soon as we have an opportunity. And then of course, office space, we all know where we're going with that. We were bearish on office space even before what's happened this year. But it's going to be really interesting to see what happens in the office space, to be determined. I don't see it being robust anytime soon. So we've stayed out of that space for all the reasons we're aware of. And even in land, I mean, land speculation, there are still opportunities for ground up development. And we're always looking for those opportunities. Of course, you don't have the instant cash flow. A lot of clients want the dividend checks on a regular basis. They want that income. Development's going to be a little bit more patient money. We won't start seeing returns probably for a couple of years. But overall, the returns are higher because your risk profile is higher. So, it just depends on like I said, it depends on what the client's looking for.
Right. And so this will be released after the election, but
Yeah.
do you find at least building up to it, your clients are taking, and it depends upon how many projects you guys have right now in the pipeline, but taking the development risk right now and want to be want to achieve those 20s plus
Right.
IRRs, or do most of them want that 8% preferred, kind of coupon coming in every quarter at this state of the market? What have you seen?
I would say most want the 8% preferred return,
Yeah.
with the upside. It's as guaranteed as you can be without saying guaranteed. We obviously can't say that, but having asset-backed securities when we have, and we also don't leverage very high. We keep a leverage down low also, so it's a very safe corporate backed. It's almost like what we call it. It's really basically a corporate bond, with better opportunities.
That's awesome.
Yeah.
And so Mike, so how could people find your book? Obviously I mentioned Amazon.
Yeah.
That's
Yeah,
great. Yeah.
Amazon is probably the easiest place to find it. Just type in Mike Brown or The Real Perspective, and it'll come right up. Should be no problem.
Awesome. Well, I'm looking forward to reading it myself. I'll have a link to Mike's book, The Real Perspective, in
Yeah,
the comments section on iTunes. So you can just click on that link right away. And feel free to reach out to Mike and his platform. And, you can even reach out to me too. And
yeah.
I'll introduce you to Mike because he definitely has an interesting business model. And, you know,
Any, if you want to check us out, redfoxcapital.co or redfoxwealth.com. Any of your listeners, Anthony, that would like a asset allocation analysis done, I'll do a complimentary report for them because they're loyal listeners to you.
awesome. Great, Mike. Well, thank you so much for coming on the
All
show.
right,
I
Anthony.
appreciate it.
Okay, buddy. Thank you. I look forward to talking to you soon.
Excellent.